Namaste, crypto aficionados and my fellow capitalists. Today I have a great show. I'm with Dr. Cleancuts, and we are going to talk about the lessons in DeFi. Cleancuts, very welcome to the Digital Capitalist Show.
Thank you for having me here.
Yes.
Glad to have met you on Twitter, Deepak.
Yes, thank you. Okay, so let's start, and maybe you could give us your background and a bit of introduction and how you got into crypto.
Sure thing.
Thank you.
So, yeah, a little bit about me. I consider myself a multidisciplinary person. I've worked in many different fields, including media, creative, in photography, commercial and personal. I've been trading stocks for 3 years. I was a video producer and a writer as well. I even taught maths, science, and English in high school, grades 7 to 10. So I've done everything pretty much that I wanted to do. I was even in culinary before this, and I'm always searching for the next thing that's intellectually exciting, something that's just like a puzzle that you can solve. And I think right now that would be DeFi. I've kind of been focusing most of my energies on that. So to give a bit of a timeline, I actually started in January this year, and that was shortly after GameStop. And I'm not sure how many of you know about the GameStop surge, which is crazy. I think it was probably about 17 times up at the peak. And it was just unheard of in traditional stocks, and I just had to look into it. So I wrote a bit of a Medium article on it. At first, didn't invest any myself because of some regulatory barriers. But in the end, when it reached its inevitable conclusion, I realized that, wow, this is the new kind of investing. This is the new retail investing that has the power to challenge a $7 billion hedge fund and to empty its pockets, basically. So I knew that I had to at least have a 5% net worth stake in this kind of activity. Otherwise, you'd be losing out. So that was what I intended to do. I bought about 5% worth of Bitcoin and Ethereum. Actually, Bitcoin at first, and then my intention was just to hold and sell when it's profitable. And I did this for about 1.5 months, and I think I made about 50% of my capital back on that, on about 5 trades. Yeah. So that taught me really something that, wow, compared to traditional finance, cryptocurrency is like light years ahead. Yeah, and we're not even talking about DeFi yet.
Yeah,
exactly. So
I think during that time when you came in, the Bitcoin was already, I think it was going to peak, and that was the time you came in the correct time and you saw your gains.
That's right. I think it was probably when it hit 55, I got out, and then but Ethereum was still under 800 then, I think. So that was really nuts. Didn't get in time, but I did come in after I discovered DeFi, because I knew I had to know what is the underlying usage before I buy the cryptocurrency.
And then after that, you went into DeFi, right?
Right.
Then you saw an opportunity in DeFi, and then what happened?
So my first entry into DeFi was actually Dracula Protocol. I've been on Reddit, our cryptocurrency, looking up for projects and things like that, trying to learn up. I was looking at ADA as well, Cardano, but it just didn't interest me as much as Dracula, because when I was reading about Dracula, it seemed that it was building something unique. And then I read about Alchemix with the self-repaying loans, and I was like, that's crazy. Where in the world would you get a bank that's willing to front you half of your future returns, which is absolutely crazy. So that's when I realized, like, DeFi, it really is doing something different. And yeah, so from there on, my first investment was into Dracula because of the relatively high cost of everything else. I honestly didn't know that many coins. So what I did was I switched to Ethereum, brought it on chain, got my on-chain wallet, and then swapped it for Dracula. And I was actually seeing about from $1 to $3, so that's about 300% gain. Was it 12% gain? And then we had a 90% crash.
Yeah.
Yeah, we went all the way down to about 50 cents. And that was my first brush with disaster, I would say.
Welcome to crypto.
Yeah, exactly. What a great roll out the red carpet. Yeah. So I had a friend as well got in with me at the time, sadly. So he was affected, I was affected, but I think I was just a bit more hard-headed, as someone who had traded in stocks and equities before. I knew that you have to pick your timing, and I waited. And in the time that I was waiting, I actually was in the community, and I was just talking around with people, and that's how I started to learn more about other stuff. Because Dracula is sort of like a gateway protocol. It connects with a lot of underlying protocols, and to understand how it works, you got to learn like what is Pico, what is Dodo, what is Aave, what is Uniswap, and so on.
Right. Yeah. Okay.
So that's how I started to branch out. Yeah, basically from Dracula.
Okay. And then you went to, and then you started liquidity mining.
Yeah. So Dracula, sort of the idea was that other people would liquidity mine, and by holding Dracula, you get a dividend of their profits.
Oh, okay.
That was the idea. And I thought that was very similar to my traditional strategy, which is in traditional finance, I would much rather prefer holding index funds rather than underlying stocks, because it's diversified, it's safe. You wait a few years, you get like a 5 to 10% if you're lucky, and it's perfectly fine. I believe in systems and growth rather than luck. I don't like to trade single stocks. So to me, Dracula was the way to go. So liquidity mining came a bit after that, actually. Once the incident hit, and basically I started working with the protocol, I was invited to join the team. And then, of course, they paid me. So I had a bit of money to spend from then on. That's when I started to think, okay, if I pair this with the Dracula tokens I have, I can create an LP, put it on SushiSwap, and then start getting sushi rewards. So we started that, and then I started doing a few others as well. I did Ethereum USDT. I did OVR, which is sort of like a Decentraland competitor. I did a few other tokens, but it was the massive gas cost that totally blindsided.
Yeah.
So I think it's really important, if you're a beginner in DeFi, figure out the gas cost, or like at least try and simulate it at first, because you're gonna spend at least $200 to $300 in your first month, I believe, just on gas alone.
Gas prices back then were really, really huge, and a lot of us, like people like me, I don't really calculate my gas cost. Sometimes when I want to buy into an IDO or ICO, you just spend that gas money, and you think that you can recoup it back, right? We think that okay, we buy this, we just buy, and then we just put the gas as high as possible, and then we think we can recoup it back. But sometimes you don't. Sometimes certain IDOs, they don't do well. They do like 2x and 3x. I mean, they don't really do well, and you can't really recoup that $500 of gas, because I know some people, just to get into IDO, they were spending $2,000 worth of ETH on gas alone.
That's right.
That's right. So so you figured out your so the good thing is that you were calculating your gas costs, and when you were liquidity mining. So did you see any profits when you were farming, when you were liquidity mining?
While on Ethereum, actually, no, I barely broke even.
Okay. And then did you still continue, or what happened?
So, a timeline now that actually brings me to around, I think, early May. And that was around when I think the second crypto crash was about to happen, or it already started to happen. And then that's when me and my friend discovered Polygon. And we jumped over. We were in the very early days of Polycat, I believe, had just launched for 2 weeks. Polycat Finance. It's a liquidity farming platform. And we got in when it was $5. By the time we exited, it was 50. And that was how we basically made back everything that we lost previously.
Wow.
And we continued on from there. Basically, Polygon was seeing a gold rush. We had, Titan, Iron Finance come in. That's when we got in. That is quite a doozy. But I basically, in the first 2 weeks of Iron Finance, I actually made about $7,000 US. So maybe even more. And yeah, that was pretty hard when it went down, and basically everything that I gained was lost. But in that meantime, I really did learn like a valuable lesson about taking your profits, things like that. Yeah, I think you mentioned it earlier. And one thing I think I would say is that the moment that you see like the gains that you want, or gains that are more than your benchmark, pull out. Just take the gains and go. Don't stay too long.
Yeah, that's actually, it's very hard to do. If I tell you my story, it's very sad story. Yeah, for me, okay, I'll just keep it short because I want to hear about you and all that. But I'll just tell you one thing. I've been here since 2016, and I have lost, and I have lost more than like what, 3 bitcoins worth? 3 bitcoins worth, 3 bitcoins worth of money just by not taking my profits and just hoping that it will go higher and higher and higher. Because 2017 there were a lot of ICOs, right? So when the ICO, when they list on the exchanges, but last time there was no Uniswap, right? So when they list on exchanges, it'll just go. So you hope they'll do a 10x and 20x and all that, but they don't, and then it pulls back and you hope that it will do better, and then it just sinks into oblivion after that, right?
Exactly.
So if I had pulled the trigger, I would have made 3 Bitcoin worth of money. That's a lot of money, So so what is the right okay, I think that perhaps to find out what is the right amount to pull the trigger and to take the profits, I think that would depend on the individual.
Yes, I'm going to be very clear about this, is that I'm no expert on technical analysis. And I also don't quite think that, it's not something that I follow. So I can't tell you that there's a ratio or anything like that. But what I would say is that just have a code for yourself. Write it down on a piece of paper, tell yourself that, okay, I make this much, I'm out. And then you open that envelope in like a month or so, you see that you make that much, okay, follow your instruction, get out. Follow your own. Because if I had followed my own advice, I'd be $5,000 richer today from Titan.
Titan. Was that the one that Mark Cuban went in?
Yeah, that's the one.
That's the one, right? Oh my God, So maybe just explain to us what exactly happened.
That is actually quite an interesting one. I wrote a few pieces on this from my publishing platform, that's DeFi. But basically, what happened is that when it started out, Iron Finance was basically trying to get into the space. Polygon, they were doing collabs with Polycat and a few other exchanges, basically like getting people to hold Iron. And Iron is basically like the stable coin. So it's their version of, say, like USDC, where some part of it is USDC, some part of it is made up of Titan, which is another token.
They had they had two of
But the truth is that Titan is virtually worthless because it doesn't have any real value except for the fact that you can use it to make up for the remaining 25% of Iron, which means that the only part of Iron that's actually valuable is the USDC. And then like the 25%, the gap is actually what other people believe it to be worth, Titan to be worth. Yeah. And how they're keeping the value of Titan up is actually by giving the liquidity mining program, getting more and more people to buy in and want to mine, because they were paying out 3 to 5% a day. How does that sound? 3 to 5% a day.
Wow, amazing.
Absolutely. Yeah. And that's how I went from about 2K to double my money in 1 week, 1 or 2 weeks. But yeah, it's not lasting, because at some point, someone starts selling a big bag, and then everyone else starts selling the bag. And yeah, like maybe you've heard about it or not, but basically what happened is that the contract had a flaw. The critical flaw was that it was supposed to print up to a certain number of Titan tokens and stop. But because the flaw was overlooked, it overflowed that amount by a factor of millions. And I'm saying a factor of millions, not by millions. As in, it went from, I think, a few million of supply to quadrillions.
Wow, my God. But what wasn't the code like audited by, you know?
Yes. So here's the thing about decentralized audits. Number one, it's all based on reputation, and number two, even auditors can't account for some contract interactions that they never thought would be possible. Like in this case, they never thought that a stable token would be used to redeem in such a high volume, and include the fact that the network was down. A lot of people believe that this was a malicious spam attack, which prevented people from moving their positions, except for the attacker, who was somebody, I think, found the records on the block scanner. It was about 10,000 matic gas that they were using to push transactions through. And the normal gas is about 5 to 10. So we would have expected you could put 500, 5,000, you still wouldn't get through.
Oh, wow. Okay. Wow. My God, that was bad, because overnight it went up. What was the all-time high? Like $50, $60?
$64.
64, yeah. And it just like crashed. Like
I should have sold.
No, I feel you, because I've gone through myself all these things so many times, you know. And but I don't know, maybe I'm lucky because I hold Bitcoin, because my portfolio is made of largely is Bitcoin. So when it takes a hit, it takes a hit, but when it goes up, it makes back for everything that you have lost over that thing. So I think that's why a lot of if people ask me, I will advise them, if you are having a portfolio, definitely keep it in Bitcoin, Ethereum, and Litecoin, or even Polkadot, because because I found out that Bitcoin actually helps. I mean, all DeFi, all cryptocurrencies and all that, it's all like, it follows Bitcoin, right? It follows Bitcoin. If when Bitcoin moons, everything just follows it. It's like a boat, right? It's like a boat. It's like the water that, brings up all the sunken boats. It just brings it up, So please continue. So after that, after that incident, how much, if you can share with us, how much did you lose on the Titan?
So I had about, I think, 15K on the whole Titan farm, and I was doing a very safe strategy, as in I was doing USDC iron with 10K, and then 5K on the Titan iron. But then when the crash came, I decided to buy in. And that was my mistake. But before that, I had already split up half, which is about 6K, and then I used it to buy Luna, which today is my saving grace, honestly. The other 7K was still inside Titan Iron, and then in an LP, when one of the tokens go down, the whole thing goes down. So it went fully to zero overnight.
Oh,
yeah,
sad, man.
Well, it's a good lesson, because you'd much rather be losing, let's say, 7K than 70K later on in life.
Yeah, correct. I don't know how many Ethereum I have lost on failed ICOs, to be honest with you. but I totally agree. Especially when you have people like Mark Cuban and all that coming inside, and then you are thinking that if he goes in, that means it must be good.
Yeah.
Right?
Yeah.
Actually,
the whole Titan, Iron Finance TVL was about 2 billion at the time. It just hit 1 billion the day before. So it grew 1 billion in one day.
Correct. I remember seeing it, and I was thinking that, oh my God, that means I was quite like, I was wanting to go in as well, but then I don't know why, I just didn't understand that. I really didn't understand that whole thing. So once, if I don't understand something, I'll just like,
absolutely. You're right. Absolutely. No one should invest in something you don't understand in.
Correct. Okay, so talk to us about Luna and the Mirror Protocol.
So yeah, my thoughts on Terra basically. So Luna is the
Mhm.
name of the token. Terra is the name of the ecosystem and the blockchain.
Right.
I really like what they're doing in terms of reaching out to normal investors, retail investors, or just retail users. Not even
Okay.
investors, because I think that's the pathway to mass adoption. You
Okay.
can't win the world over just by showing them your interest rates, showing them your capital efficiency, because there's a ton of people who use payments and all that, and they don't understand all these rates and things like that. They only know one thing. They want to buy something, they pay with something, and then sometimes there's fees, credit card fees. We've paid them all 3%, 6%. If you're a merchant or you have an online shop, you know that these fees kill your business over time. I used to get sales on my photography online, so 3% of, like, say 1,005 is massive. Massive loss there for massive business cost there for me. So after finding out that Terra was actually doing payment apps in Korea, South Korea, and also in Mongolia, where the transaction fee is 0.2% or 0.5, I believe. And they are using, they are accepting credit cards and things like that. Or I'm not sure if I'm getting this fully right, but basically they are challenging the credit card standard of payment processes. A payment gateway that's actually affordable and good for business, easy to set up. And that's what got me convinced, basically, that Luna and the whole ecosystem, it has massive growth potential because of this.
Okay. So Luna is something, it became quite famous because I think of Mirror Protocol as well. Is that the one where you can earn 20% APY a month?
That's
Sorry,
I think
a
the
year?
20% is actually Anchor. Anchor would be the one.
Anchor. Yeah. But that's
Uh,
also part of the Luna ecosystem.
Absolutely. And I think
Yeah.
it's really smart what they're doing. So imagine if I were to translate this basically into Ethereum terms.
Okay.
This is like saying that, okay, there will be, let's take Aave, for example, and they will say that, okay, you deposit your Ethereum with us, and we'll stake your Ethereum for validators, meaning we'll use them to do the validator node, and then we'll get the validator income from the fees. So we won't pay you any of the income, but your Ethereum balance stays the same.
Okay.
At the same time, if you deposit, let's say USDC with us, we'll pay you 20% interest on that USDC based on the income coming in from the validators. So that is what Luna is building. It's basically like a self-feeding ecosystem, or like a self-starting ecosystem. Basically, the demand from the anchor rate actually makes more people lock up their Luna, and then Luna gives more income to the UST stakers, getting the 20% rate.
Correct.
And this 20% rate is so stable because they have a runway with actual cash runway for about 1.5 years, and they can accommodate up to another 500 million in deposits. So there's a lot of protocols building on it, including Angel, Pylon. Yeah.
Interesting. And what does Mirror Protocol do? Is it something like where you can buy like stocks and all that, synthetic stocks and all that? Is that?
Yeah, that's right. Basically, Mirror Protocol, it's sort of, I've heard, I follow this writer called Matt Levine on Bloomberg, and he was basically writing about this because someone else did, also from Bloomberg, wrote like a critical article about Mirror Protocol, saying that it trades fake stocks. So I'm going to tell you, the stocks on Mirror Protocol, they're not real stocks because you don't get dividends, you don't get ownership of the company, but it tracks the price. And the sole reason for trading this is because of market access. Not everyone can access US stocks.
Yeah. It's difficult to do that, right? You gotta go to the bank and open up an account and all that. And you can't do it online very easily. I know, especially from Singapore. Like, I wanted to buy the Coinbase stock also. I really had a hard time. I had a hard time. Yeah.
Absolutely. Not to mention your bank has to pay the exchange to somehow to get a license to sell that stock and this and that. There's a whole lot of like stuff that needs to be jumped over. So with Mirror, you kind of eliminate that if your goal is just to speculate.
Yeah, I think it's a good idea to do. But Binance, I think the regulators came down hard on Binance for, I think they were doing the same thing. I think they were also tracking stocks and something like that. And then I think I read that I think they're going to stop doing this already because because the
That's
regulators
right.
came
They
down
have.
hard on them
I
with
think
this.
one of the differences with the Binance one, I believe, is that they actually pay some sort of synthetic dividend to the holders, or like an incentive. So when they saw that, then the regulator said basically like you can't be giving a dividend or like a fee because what you're doing is you're actually making it a security, because now it's earning like a dividend, which is
Right.
not supposed to. So I think Mirror doesn't have the same danger, but of course, regulators change their mind or this and that. You could see like a more regulated crackdown on Mirror. But as of now, I can see that there's not much danger, at least from my view. Yeah.
Okay. 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 Great. So I will take a look at Mirror Protocol and maybe try to do a video on that. Tell me, what advice would you give to noobs that are coming in, who see a chance to make money? Because I think personally this is one of the best places, where the best opportunity that we have, to make some
Yes.
money. So if, let's say, if a newbie were to ask you, hey, I want to get into crypto and DeFi, what would be the advice you would give him or her?
So yes, number one, trust your gut. If you're in a coin or a community and you start feeling unsure about it, I believe your subconscious is picking up stuff that you don't even know. Maybe the developers are being kind of skeevy about it. Maybe the other holders are kind of like pump and dumpers. They're talking in a way that's just not sustainable, not what a long-term community should be like. Then, if you feel that way, I would say get out. It doesn't matter if this coin goes to 1,000 or whatever. If it doesn't hold that value, that means you have to time it. And I will tell you this, from my personal view, no one can time it. Nobody, not even the best supercomputer in the world, can trade stocks and know when to sell and buy, like exactly when. So don't time it. Just buy something that has value, underlying value. And that's not to say that, like, for example, I don't like Doge, but some people do. A lot of people do. In fact, enough people to put it up to the top 5. So I would say like there's a sort of value there that's not being seen by the critics, which is like community value. People buy Doge to be a part of something. They're not buying it because, oh, I believe this coin. I mean, maybe some people do believe that it has value, but they're buying it, I think, because it has community value, to be a part of something, to say that you're a part of something. Why do people buy gym memberships and never go? And that's a multi-million industry by itself, gym memberships. So why not Doge? It's a membership.
That's a very good point. Especially the part where you said the community, right? I think like Doge, what does it do? I mean, it's just a coin. Yeah, it works, right? You can send I can send Doge to my friend. He can send me back. It works, everything. But other than that, what does it do, right? But the thing about Doge is that it has a strong community, and that's why I think we cannot ignore, especially tokens that have a very, very strong community and that can rally a token up.
Yes.
Yeah, like coins like Doge, even XRP.
Yeah, that's another
Right.
one.
Right.
Yeah.
I mean, we can say that it's like a glorified Excel sheet or whatever, but at the end of the day, if there's a community, a strong community behind it, who are we to say anything, right? I mean,
Exactly.
yeah. So I think that's a good point that you have made. Okay. I want to ask you, what are the coins that you see that are going to do well this year? I mean, the next 18 months. What are you looking at? What are you buying?
Okay. So I'm gonna try not to shoot my bags too hard, but I think if I focus on just the values and the fundamentals, maybe that will get us
Okay.
through this.
Okay.
Number one on my list is actually Terra, as in Luna. I believe with the mass adoption, Luna can definitely be a $20. I mean, $20 coin again, or maybe even more by the end of the year. Ethereum for sure, not just because like Ethereum itself, but having been to Binance Smart Chain and Polygon itself, I can see that the quality of projects on Ethereum, they are very smart. They are extremely innovative, and they've got the right ideas to move forward. And I think that even after we have all these layer twos, the most valuable projects will still begin in Ethereum. It'll still be the OG for DeFi.
Okay.
And then number 3, I would say Olympus. This is maybe a little lesser known, but this is kind of my Doge, but with like extra steps, because Olympus has its own treasury, it has its own protocol, own liquidity. So even if nobody is buying in, the protocol generates its own income. So that's how I feel safer I'm investing in it rather than something that doesn't generate its own income. And after that would be Mirror Protocol. I still have a big bag because I like to vote on their governance proposals. And I think that their governance mechanism in Terra is really, really good. Like the fact that they actually reward users for voting and active participation. I think that's the future of DAOs. You need to reward users for that. And then Sushi. I'm pretty big on the whole Sushi ecosystem. I think they are kind of like the next Google, but in DeFi.
Wow.
Yeah, they're in everything. They're in Harmony, Avalanche, all the layer 2s, they're in Polygon, Ethereum, and they're not in Binance Smart Chain, which makes me trust them a bit more. But yeah.
A lot of rug pulls in BSC, right?
Oh God, yeah.
Yeah. I was rug pulled.
Oh, you were?
Some Inu coin. I just went in for fun, for fun. I because I wanted to, when I joined the Telegram group, I just suggested, let's help the dogs, let's feed, like, just put like, a certain percentage of the transaction costs to go and, to dog shelters, because it was some Hattori Inu, but then, they just scam, they just rug pull when they collected. So I put in not so much, but I think about 0.3 Ethereum just for fun. And it got rug pull, and then when I started asking questions, they banned me. Then I messaged that dev, and then he also he deleted the thing. I couldn't get access, and then but luckily they had some kind of fake pump or something, and I was just looking at it for a couple of days. I was just monitoring it, so it managed to go back up when my bags went up to I just broke even. So the moment I broke even, I sold everything.
Good.
Yeah,
that's good.
Yeah. So they had some fake pump, and then after that I just and I just went. So I was lucky in that. I was very lucky in that. I even made a video on that. And,
I think you can have a whole series of rug pulls itself.
Yeah. Then I made another video that don't invest in that coin Hattori. Just to warn people and all that. Yeah. Okay. If I give you, if I have $1,000, okay,
yes.
If I give it to you, what is the best way? What is the best way for me to make money with $1 grand right now in crypto? Or DeFi. Yeah.
If I were to do it, here's how I do.
Okay.
Because I'm already in for 4 to 5 different chains. So I diversify, not evenly. I'll put maximum, probably like 50% of it in Terra, either in Luna, probably a Luna collateralized position, and then short something on the Mirror. And then the rest of it, I'm going to split it $100 each into probably Solana, Olympus, and Ethereum. Then I find a way to stake it or borrow against it, and then use that borrowed money to put a liquidity pool.
Yeah. I think that is what a lot of people are doing right now. Things like liquidity, you put your ETH inside that, and you can borrow LUSD, and you don't even need to pay them back. It's just that it's just that you can't drop below a certain amount. Your percentage, the ratio, as long as you keep that ratio there, you can borrow. I mean, you can use that money and you can do whatever you want. You don't have to pay them back, so I think, like what you said, these kind of protocols that allow you to borrow money, but is there any interest with that? That you
Oh
have to
yeah,
pay?
you do have to pay. There's a variable interest fee,
Right.
or a fixed one. Of course, usually the variable is usually lower than the fixed. But yeah, if you borrow on Aave, if you borrow on Compound or anything else at all, you have to pay an interest fee of say like maybe 3% I've seen, maybe sometimes
3%.
18% if the supply is really short, meaning there's a lot of borrowers.
Right.
Because sometimes when, let's say like USDT, Tether, right? People think it's gonna go down. Suddenly, the borrow versus supply, it flips around. A lot of people borrow Tether because if it goes down, you don't have to pay back the full amount. I mean, as in you borrow, let's say 1,000 Tether, and if it crashes, when you repay it, that 1,000 Tether is only worth 500 or less. So your loan kind of like, you're shorting it in a way.
Okay.
Yeah. So that causes the interest rate to go up for Tether.
I see. Yeah. Look into Liquidity. I mentioned just now. I'll send you the link for that.
Yep.
You don't have to pay any. There's no interest.
Wonderful. How do they make money?
Yeah. So when they there is like a when you stake your ETH, right, inside it, there is a there's a fee. So they make money when you put in your ETH and when you remove it. So there's a fee. But other than that, you don't have to pay them back. And the thing is that it's like a trove. So if you don't hit a certain ratio, if it goes below that ratio, it closes your trove and you get liquidated.
Yeah, that's actually very, very close to how it works on mirror shorts.
Okay.
So I think you find that interesting to look into as well.
Right. Great. Okay, I mean, okay, so I think, we have covered a lot. And would you like to say anything in closure, in conclusions, any last words that you have for us?
Would it be okay if I talk about this community that I'm building?
Please. And also let us know, how do we find you? How do we follow you? And, all that. Yeah.
Absolutely. So I'm on Twitter as at Dr Clean with the 4 instead of A, and I'm also at Desk DeFi. So Desk DeFi is actually my brainchild from about a month or so ago. I just thought to myself, how am I going to make a sustainable income in crypto? And this was because the market was crashing. So of course, at those times you think about what you can build instead of what you can buy. And I was just thinking about what my strengths are. Basically, it's in writing, it's in talking to people, it's in basically sizing projects up as well, like figuring out, is this valuable, is this not valuable? And I did not want to be one of those crypto influencers who are just telling you what to buy and what not to buy. So I kind of want to just build a community of people to discuss this. What is the merit of token A? What is the downside of token A or token B? And that's my community that I'm trying to build. It's called Desk DeFi, or DeFi Desk. And it's basically what I call a community of learners and earners. And we're all here to basically work on ourselves. We're very beginner friendly. I also post some bounties and job posts as well in there. So people who are looking for employment, hit me up. So I'm trying to build something that's lasting.
And how do we follow you, or how do we join that again?
I do have a Discord link. It is on my Twitter for DeFi Desk. So if you just search DeFi Desk or Desk DeFi, you'll find it. And then on the profile, there's the Discord link. Okay.
Please send me your links so that I can put it on my description box.
Absolutely. Thank you so much.
I would like to join as well, so I can learn.
Yes, please join us.
Learning.
I would love to have you there so much, honestly. As someone who has been holding Bitcoin since, was it 2016, 2017?
Yeah, 2016.
I think you bring a lot to the server, honestly. Yeah, we would love to have you.
Yeah. Sure. Thank you. Thanks a lot for your time. And, hopefully in a couple of months' time, we can talk again when there's another bull run coming, and then we can size up projects and, we can discuss.
Yes,
I would love to have you back on my channel again.
Absolutely. All the best. I love what you do, and keep doing it.
You.
You're great at it.
Thank you. Take care. Yeah, talk to you soon.
Please support me to grow my channel. Please like, share, and subscribe. Thank you.